Well, Ajay Vora is with us, head of equities at Nuvama Asset Management. Ajay, great to have you with us here. Thank you very much for your time. So, Ajay, just a quick word on the sort of market itself, which is that some have pointed out maybe getting a little overheated, positioning all one-sided, very extreme with the rally that we've seen. At least the futures data, etc., shows that. We've certainly broken out new highs, etc. Underperforming sectors have started to participate on odd days. Not today. Private banks, for example, is a case in point. Telecom tariffs are through. The hikes are through. What next for the market in that sense, Ajay, from here?
Hi, Prashant. Good afternoon, and thanks for having me on the show. So, coincidentally, this is something what we all, as money managers, have been hearing from. I think every investor interaction, and with every 1,000-point rally, we would say that now it's more or less getting overheated, and now it's more or less getting done. Most of the positives are in the price, but actually, if you look at it, and maybe I've also thought about it a lot. A couple of things which actually will lead to, I would say, a meaningful market correction. Either so historically this is proven that either there is a liquidity crisis or you have a major earnings downgrade. At least both of the things are not visible as of now, although in pockets you may find markets a little expensive, something on the capex side and maybe a couple of other sectors. But actually, if you look at the numbers, FY25, if you are looking at an EPS, Nifty EPS of somewhere close to 1250, 1280 rupees, and if you give around 20 times fair multiple to that, you should be ballpark somewhere around 25,000 odd. And this is something, we have been maintaining right from, I would say 18, 19, 20,000 or so. That 3 months down the line, meaning we are in July already right now. Maybe by October, December, you'll completely start discounting FY26. So I think I don't think it is overheated. Positioning wise, now it's definitely a thing, but that is more a short-term kind of a thing. But overall, if you look at it, the kind of results which we are seeing from most of the companies and the sector rotation which is taking place, I think that is pretty healthy. So if you look at this month also, it has been a pretty broad-based rally across all the sectors, right? Barring metals as a sector, you see, right from cement, banking, autos, pharma, all the large cap names have done pretty well. And just to give you one more perspective over here, it's been 6 months now, Jan to June, index is up close to 11% odd, whereas FI inflow is nil so far, right? And we got just $2 billion this month, and we saw market movement of almost 5 to 6%. So I'm just saying that I don't think markets are overheated as such. And last year we saw FI inflow of almost $20 billion. This year in first 6 months it has been flat. So hopefully if you get some more money in next 6 months, there can be a decent upside as well.
Ajay, good to see you in a Friday mood, Friday dressing.
Yeah, just trying to be in line with market mood, Reema.
Chill today.
Yeah.
All right. So, talk about the, price, the way the stocks are reacting to the telecom tariff news. Bharti, Airtel, Vodafone, Idea, all of them are reacting negatively. Stocks are under pressure, but Reliance Industries is moving up. So what have you made of that?
So I think it is definitely a positive, and that is the reason why you saw these stocks doing well since, I would say pre-election and more so over last 1 week or so. It was long overdue. And as most of the promoters have been talking about, the ARPU in India has been at the lowest level. This kind of a hike, I think it can be easily absorbed on the consumer side. So I was just reading one of the reports, and it says that the overall shell out from the consumer wallet would be somewhere close to 50,000 crores. And if you look at at least 60-70% of that flowing through to EBITDA level, it will be close to 30-35,000 crores to the entire sector. So my sense is that it is a decent number, and this gives you a clear sense that how these companies are planning to shape up the ARPU going forward as well. And we all know how cheap the data is available right now. So I don't think consumers will really mind paying a few percentage points higher, and which eventually helps these companies. And why maybe these stocks are doing well, because if you look at it, large part of the capex is behind them. Incrementally, you would see that more profitability will help them deleverage the balance sheet. eventually resulting into higher market cap. So I think that the sector has been doing well and can continue to do well from here on as well.
Ajay, the question was actually that the way the stocks have reacted, because Bharti, Vodafone, Idea, they're all down after the news. So is all the good news in the price now? And it's only perhaps in Reliance Industries where maybe there is still some comfort and valuation because Reliance has moved up. So wanted to get your thoughts in on that point.
No, so I don't think so. It will be definitely some sort of profit booking on news because if you look at Bharti, it has moved almost 40%, I would say, over last few months. And similarly with the Vodafone Idea as well, which has moved almost 60-70% since the fundraise. But I think that, if you do the math on Bharti itself, they'll do somewhere close to maybe anywhere between 95,000 to 1 lakh crore of EBITDA, and current market cap is somewhere close to 9 lakh crores, and add to that the debt number. But my sense is that going forward, if you have a visibility of at least 15-20% growth, I think the compounding can continue even from current level. So I think it's just profit booking on news, but the story still looks attractive.
Yeah, got that. Pull up IIFL Finance if we can for a quick bit. Look at the move which is materializing on that one. 518, 519, it's a 8% pop. That's a very, very sharp move on IIFL Finance. Now, there's no news flow or anything. They released the fourth quarter full year numbers, etc. recently after a delay because, the RBI restriction on gold loans and IIFL Finance is still in focus. And of course, the trigger for the stock, the audit got completed. We reported that. But of course, now it's up. It's the next trigger in that sense is going to be when if and when that ban is lifted on IIFL Finance in terms of gold loans. Company, of course, has been a super performing sort of stock. A company over the last many years now, but this, of course, was a bit of a problem. Remember, the high on IIFL Finance before the restriction came through was almost $700. The low that we saw was about 300. So, it's from the lows it's come up a little bit, but still off the highs by quite a bit. Ajay, some of these wealth management companies, if you want to sort of comment on. I think it's now very quickly it's become a pretty well-covered space. You've got a couple of foreign guys who cover it, some local sell-side analysts as well. Do you like the space? Do you own anything here?
Yeah, so we own a couple of them, but the point is that on this, Prashant, in India, if you look at it, any business which you want to build, which is a B2C business, I think the whole distribution channel is the most important piece in building that. We have seen that with mutual funds and even within the whole consumer space. If you look at any company like Asian Paint or a Lever or any consumer durable company as well, the distribution part is the most important thing. The more you can reach to the final consumer, that makes the company more valuable. So I think the same story is playing out in this space as well, which is the financial product distribution. A lot of wealth has been created in this country in the smaller towns, but I think that not much of education is there in terms of how to invest that wealth. And therefore I think the distributors with the quality people which they have, I think is adding a lot of value at the ground level in terms of educating the investors how should they invest their money. And I think this space will keep getting better because as more and more people are getting wealthier, they are looking at more and more sophisticated products and avenues to invest. And eventually, it is the financial product distribution platform which facilitates that. So I think that, this space, as you rightly said, it's very well covered now. People have started understanding. And I think that, still it is a very, nascent stage. I think the growth rates can get better from here.
Any big portfolio calls, bets that you've made in the last 2 months, Ajay?
So, Reema, we are incrementally getting more positive on the overall consumption side. I think that, on the capex side, we are looking at many ideas, but everything is a little more stretched in terms of valuation. But consumption is something what is looking very attractive, be it consumer durables or be it branded retail, or even for that matter, even the real estate space. I think although it has done really well over last 1.5 year, but I think the ground level demand is very robust and this can continue. So moving more from capex kind of stories to consumption led stories. And on the other hand, the whole infra play, we like the cement sector now. We believe that the overall consolidation is picking pace, and as this gathers momentum, there will be significant price discipline, and therefore the profitability also can improve over next 2 to 3 years. So I think that consumption and within infra cement, these two spaces are looking very attractive.
Thank you very much, Ajay, for joining in. Let's get in a quick corporate conversation.